What's going on, guys? Welcome back to another video. Thanks for tuning into Stock Essentials. My name is Alex, and today we're going to be going over AMC stock. Another red day, because we know on Tuesday we had such a great day, up almost 30% on the day, and then these past 2 days have been a little bit red. Not too bad, only around just under 10%, I would say, factoring in both today as well as after hours. That's just under 10%. But we're not too worried as Apes holding AMC. In the short term, we don't really care what's going to be happening with AMC. If it drops, it doesn't matter because we're holding AMC for the long term. The longer we buy up these dips, the longer we hold AMC shares, we're just going to be waiting until the squeeze occurs. So we're not too worried about what the price is. AMC can drop to $30, and I'm not going to break a sweat. I'm holding 200 shares of AMC, possibly going to be adding another 100 later on for you guys, and you guys should do the same as well if you're in AMC for the ape movement. Obviously, it hurts to see AMC being bearish in the short term, but that is just the short term. And when this squeeze occurs, we're going to be seeing AMC go to sky high levels we have never seen before. This is because of all these shorts not covering their shares yet, not covering their short positions. So they're losing billions of dollars just holding their short positions and just betting that AMC is going to go back to its penny stock price point back in where it was last year. But AMC sitting at just under $37, it's still at a very good price point. And if you're not yet in AMC or you have some extra cash lying around, throwing it into AMC shares could be a good strategy. You definitely don't want to miss out on AMC when it begins to skyrocket. And we can't really determine or set a specific date on when it's going to occur. We just got to wait it out. It's best to buy shares of AMC, put it in your portfolio, and just don't even look at it. Don't even look at it until the squeeze occurs, and then that will help with your mental state. Because I know some people are freaking out at these bearish drops in AMC, but you really shouldn't be too worried, because if AMC goes to sky high levels, we could see AMC going to $100, $200, $300, just like what GameStop did earlier in the year. GameStop is sitting at just under $200. It went to sky high levels early in 2021, hitting highs of $400, as well as hitting another high of $300 back in last month, June. So if AMC does the same thing, this price point of $30 isn't going to be too bad. You're going to be making 1,000% return on your shares. And the main reason for this movement is to just basically fight back against the hedge funds who are trying to short these companies into the ground and bankrupt them. So us as retail investors are pushing back, and we just want to play the same game they're playing. And so far, it seems like we're doing pretty good. I know that a lot of you are still holding your shares. I think it's a bloodbath, but don't worry. AMC eventually, in the long run, is going to it's going to give us what we want. It's going to give us that short squeeze, and eventually we're going to be winning. And all we have to do is hold our shares. Because remember, it doesn't cost us anything to hold our shares, but it's costing these hedge funds millions of dollars week over week just to hold their short positions due to fees. So that is why you shouldn't be too worried about AMC. If you want to, if you have over 100 shares, you could sell some out of the money covered calls just to collect some weekly premium. But other than that, just don't even worry about too much. And the strategy you could do if you're not yet in AMC, and you would like to buy the dip, obviously you could outright buy 100 shares at this price point, $36.82, or you could head over to the options chain. And if you're familiar with cash secured puts, you could sell a cash secured put to try to buy AMC at a lower price. We could do this by heading over to the AMC options chain, do something like 2-3 weeks out. For this example, we're going to be doing the August 6th expiration date. And say you're fine with buying 100 shares at, say, $30 each. So you can select the $30 strike price. You will get paid to buy 100 shares at $30 each if AMC goes below $30 at expiration. Because if AMC goes below your strike price, these contracts are going to be exercised, and you have to buy 100 shares at $30 each. You will need to put down $3,000 of collateral, as we can see here, but you will receive a minimum credit of $225, and you will be keeping that credit no matter what. So as we can see, the break-even point is going to actually be at $27.75. That is going to be how much you're going to be buying 100 shares at, because we're factoring in the premium we're collecting, which is going to be $2.25 per share. Each contract holds 100 shares, so it's overall going to be a total of $225, which sounds pretty nice, getting paid to buy the dip. And obviously, if you're pretty bullish, you could do like a $35 strike, collect even more premium. The higher you go, the more premium you're going to collect. So like a $35 strike, your break-even point is going to be $30.65. If AMC stays above your strike price, the contract expires worthless, and you can sell another cash gear put for the following weeks. So that is one strategy that you could do. And of course, if you're already holding 100 shares, you could sell covered calls and then collect some premium, pretty nice premium. The call options are going to be having some high premiums due to all these institutions and hedge funds actually are naked shorting these calls. So the premiums are going to be a little bit inflated, and you can actually capitalize on this a little bit by selling some covered calls against your shares. So something far out of the money, like a $55 strike, you collect $154 of premium every 2-3 weeks if you continue doing this strategy. So that is some way to recover some of your losses in the short term. But overall, don't worry too much. Keep holding your shares and just be patient. It might take a long time, but overall, if we wait it out, if we're nice and patient, we hold our shares, it's going to pay off very big in the long run, which is going to be very nice for us. And basically the ape community as a whole, very good for the community. And we also have to remember that AMC shares is owned by 80 to 90% of the retail investors. So that's a very good sign. And if we continue to buy up all of these shares and just hold them, we can see AMC go to really sky high levels when the hedge funds actually have to cover their shorts, because the supply is going to be very limited. So they have to buy AMC back at very high prices in order to cover their positions. So that is why in the long term, we're very, very bullish. We're going to see AMC absolutely explode, possibly even bigger than GameStop, which skyrocketed to $400 early in the year, just because of the ape community coming together, buying up all the shares and holding it for long term. So that's about it for this video. That's my thoughts on AMC. If you liked it, please leave a like. Comment down below what your position is on AMC. Are you buying these dips? What are you doing? And of course, subscribe if you're new to the channel. It helps out a lot. Thanks for watching.